What about participation? The reason I bring that up is because about 3.5-4 weeks back, we had a day where we saw a turnover of 96,000 crores. Last 2 days of FNO expiry, we saw turnovers between 75 and 85,000 crores. First couple of days of this new series, we saw the same 80,000 crores plus, but now it's retraced back to 65,000 crores. Was that just heightened activity around the futures and options expiry time, or is participation expected to remain low for a while?
I think participation should be low. What I think the volume spikes really happened was when a lot of unwinding at the from the FII end happened. So you had a heightened activity in the FII. Probably that activity is tapering off at this stage. That would be my guess. I don't have an information or anything on that, but that's a guess I'm taking.
Sure. Capital goods has often been viewed in two ways. One is if you look at it in terms of the outlook, rate of growth of order book, and the other is of course the order backlog and the execution risks on that. How are you positioned? Siemens, ABB, L&T, BHE all have very sizable order books for their company sizes. How are you positioned on the sector here?
See, I have always been maintaining, I think we had this discussion before also on this. I think the execution risks are very high today. They are good companies. I would buy them at far lower prices than they are today. Simply because they have an order book doesn't mean they can execute everything today. And they are also facing cash flow problems, as I understand, from the customer side. There will be order delays, defrayment. So you will see that kind of a pressure. So I would not pay these kind of valuations even today.
What about this entire argument of mid cap and small cap versus large cap? Because for the week, you've had the Sensex go up 3.5% and Nifty go up 2.5%. But the CNX mid cap index has gone up nearly about 5%, and the small cap index roughly close to about 3%. Is this just a one-off, or is this a reflection that there will be that valuation catch-up game that will probably be played for the rest of the month?
You will see that happening because what happens mid-cap really being illiquid. So if you have institutional buying in that, it can ramp up prices. Once you freeze the liquidity in a stock, then it needs very small marginal doses of incremental buying to ramp the prices and the NAV up.
The biggest positive and negative for this market going ahead for the next 3.5-4 months of this year?
I would look at inflation, global, and oil. I think apart from that, I think the earnings is more or less going to be subdued. So the markets are expensive by that yardstick to me. I want to see interest rates coming down, because with interest rates at 10% which you are getting on an FD, the market should be trading at 10 or 11 times. I don't see the visibility of interest rates coming off actually. So I would rather wait out for some more time.
You raise a very interesting point, and the reason I want to dwell a little on it is because ICICI Bank chose to re-alter its auto loan portfolio, especially to two-wheelers. Can that become a systemic issue going ahead, where banks look to reallocate the amount they lend to particular sectors because of the pressure points in another sector? You know, two-wheelers are probably the highest interest rate sensitive. You know, Vaidyanathan told us that they were lending to them at 24%. Obviously, there's an impact on demand, and it's not something that the banks will be doing out of choice. It's because they're facing the pinch at one end as well. Can you see that happening with respect to housing loans and auto loans more and more, and delinquencies rising as a consequence?
No, see, the delinquencies have already been rising. So what a bank is doing is a reactionary measure. It's not a strategic move in advance saying that I am seeing the risk. You have expanded your portfolio. Now, when everything is going good, you will go to the same spaces all over again. So this is a cycle which will keep repeating, Rahul. I don't see anything strange in this. Delinquencies are high. In the last 4 days, newspapers have been full of retail loans, problems, and delinquencies ranging from 4 to 6% across, whether it's personal loans, auto loans, even housing loans are coming under pressure. So it's not something new. So when you are under pressure, you have to meet Basel III next year. You have all these issues. So you would rather conserve your capital and go into other areas. Today, when corporate demand is good, you can actually lend to corporates at higher rates. So why go into this kind of high risk areas? And there, other problem is you have recovery with third party agents, which is again a problem. Origination also used to come from third party agents. So the banks were really not in control of this. So what is happening is risk management is getting sharper with experience.
Right, Mr. Balakrishnan, we'll leave it at that. Thanks so much. A pleasure speaking with you as always. We'll head into a break. The markets have closed for the day, and they've closed, as we told you, 35 points higher for the Sensex, which will adjust in a couple of minutes, and 5 points higher for the Nifty. We'll be back with the internals of the market, trading calls, commodities, futures, all of that when we return. Stay tuned.